Welcome back to another episode. Today we are going to take a quick look at DraftKings. This stock is down about 5.4%. DraftKings is one that I've been adding little bit by little bit over time, and a company I'm very bullish on. In today's episode, I want to take a look at why the stock price is down right now, but also I want to take a quick look at some of the future growth this company can see. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So, like I mentioned, right, DraftKings currently traded under the Nasdaq as ticker DKNG. Right now, stock price as I am recording is down about 5.5%. I do believe earlier today it was down over 7% at some point, and this right now has a market cap of $21.86 billion. And that number is important. Just remember that number in a bit. But the main reason the stock price is kind of seeing a kind of a downturn right now is DraftKings. There are reports that DraftKings makes a $20 billion offer for a UK sports betting company called Entain. So we're going to take a quick look at that company, Entain, to see what kind of potential there is. But right off the bat, a $20 billion offer, that's almost the same as the market cap for this company. So that would be a huge acquisition compared to DraftKings stock price. The actual price itself has not been confirmed, but there are, I believe, filings with the London Stock Exchange that do confirm that they have received a proposal from DraftKings. But like I mentioned, a price out there does not include the actual price. I do want to say though, Entain is a publicly traded company right now, and this is currently traded under the market as ticker over the counter as ticker GMVHY. I'm pretty sure it is another ticker in the LSE London Stock Exchange as ticker ENT. And the stock price right now is up over 18.20, over about 18% on the news right now. But before we take a quick look at Entain, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content for you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through The Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the first thing I wanted to see is, hey, a $20 billion market cap offer, if it is true, what would they be getting? So Entain right now is in the sports betting market, right? But they do so much. They do sports betting, casino, they do bingo, poker, and they even do retail. They are the number 2 in UK, number 2 in USA, global market, right? Number 2 in Germany, number 2 in Italy, number 3 in Australia, number 1 in Georgia, number 1 in Brazil, and number 3 in party poker, which is global, right? So these are present information from their investors relations website, and we can get a lot of information. This was August 12th of 2021. So right off the bat, we can see this would be a great market. It's definitely a smart acquisition for DraftKings. Normally, you see stock prices of the company doing the acquisition or the company buying another company go down. And why would that be the case? Normally is, hey, first thing is when you're buying a company, you're either going to pay in cash or in a stock deal. If it is a stock deal, you are diluting shares to some bit. If you're paying in cash, you're reducing your balance sheet. So both are kind of seen as a weak thing fundamentally. DraftKings, like I said, there's no actual rumor in price, but if it's around that price target, it's either going to be some stock selling, a stock deal, and cash deal. I do believe it's going to be a mixture of two. Right now, insiders say it's or the online reports say that it's mainly going to be a stock deal. I do believe that's probably the best move, but obviously some form of dilution does affect stock prices. The other thing is investors of DraftKings might think that they're kind of overpaying for this company. So that kind of also decreases the prices, and any kind of debt might also kind of deteriorate that the company might bring with it, might also deteriorate some of the balance sheet for DraftKings in the future. So this is normally the case. One, the premium, the uncertainty of how it's going to do. And right now, I mean, you're buying DraftKings is planning with reports of buying a company equal to its size. That's a huge move and can come with a lot of risk. I personally like it. I wish it's going to be an all-stock deal. I'm definitely going to enjoy it if it is. Entain, for example, they are kind of focusing in future consumer trends like betting and gaming content, the gamification. DraftKings is doing this pretty strongly with their DraftKings Casino. They want to do more video programming. DraftKings is also entering the content creation world in one way or another. More audio content, more live betting experience, more free-to-play games, more interactive entertainment, and more social features. So I do believe it is a great company. I want to say one of my biggest fears right now with this acquisition is this is already a big company. DraftKings is definitely big, but is management ready to kind of be able to lead the charge with another big company joining with it? And that's definitely a difficult task. So it's going to provide management with some form of, I want to say, obstacle. Obviously, with transactions like this, you do keep the leadership of the other company, so they're able to kind of mitigate that risk. But still, it's going to be a whole new game changer, absorbing a company this size. So there's definitely comes with risk. And they also shared a little bit of information on the overall, I want to say, some great statistics on sports bettors. Sports bettors are up to 2.8 times more likely to watch betting content. They're about 2.7 times more likely to play free-to-play games, and they're up to 1.9 times more likely to read statistics and analysis. So absorbing this company, they're going to absorb a great amount of users, and with that, a great amount of users, they're going to be able to cross-sell a lot. Finally, I do want to say though, with this right now, Entain does have a partnership with MGM Resorts, and they have an exclusive partner in the United States as online sports betting and iGaming market through their highly successful 50-50 joint venture BetMGM. So I do believe, and as a consequences, any transaction whereby Entain or its affiliate would own a competing business in the US would require MGM's consent. So if this deal is happening right now, MGM has to approve it. And that is going to be very interesting, right? I mean, if whatever type of partnership they have with Entain right now, for the partnership to happen, either DraftKings would have to kind of let go of that business segment. But definitely interesting to see how MGM is going to respond to it after they kind of announced that statement on September 21st, a few hours ago. So I'm still liking DraftKings. I'm liking DraftKings with or without this acquisition. So regardless, I believe this is kind of giving investors a nice buying opportunity, especially more of dollar cost averaging at this times. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.